Hey, what's going on? This is Money Morel, and today I'm here with Jimmy from Asesores Míos. And together, combined, we have over, Jimmy, how many years worth of experience?
At least 15 years each, so 30.
Like probably over 30 years worth of business lending experience. And today we want to debunk all the myths that it comes when it comes to getting access to business capital as an entrepreneur, as an established business owner. So you guys are in for a treat because it's like you're literally just talking to the bank, to the underwriters. We're gonna release all the secrets and we're gonna talk about everything that you need to know so you can empower yourself to get the knowledge that you need to get access to the capital that you need.
That's right.
So, Jimmy, you wouldn't mind telling me, how did you start your banking career?
So I started in banking first as an entrepreneur. I went from bank to bank seeking capital, and I got extremely frustrated every time knowing that my business was established. I know I could pay the loan, but after paperwork after paperwork, I would always get denied, and I would never be told exactly what the reason was.
My story is very similar to yours. Just like any Dominican person that comes to the United States, my father opened a grocery store. I started working at the grocery store, and eventually he wanted to expand. And the problem was that we went to the banks. I mean, I was translating for him at 16, 17 years old, and I didn't know what was going on. We went to the bank. Hey, we need a loan. How can we get a loan? Oh, apply, decline. So what do you mean? We had the credit.
Right.
At least we thought that we did.
Right.
We had the capital to pay back the loan. We just didn't know what was going on.
Right.
So after that probably set my family back and my father back a good like 5 to 10 years because he didn't get access to the capital that he needed. So he couldn't expand. He couldn't hire people. He couldn't buy the building. So you know what I did? I decided to join the enemy. Well, not to say the enemy, but yes, at the moment it was the enemy because I got declined.
Yep.
So I joined the banks all the way from being a teller, branch manager, all the way to becoming a vice president in commercial lending, because now I wanted to know exactly the knowledge that I needed to have so my father could get approved and so I could fund my entrepreneurial journey.
Nice.
And that's literally what I did over 10 to 15 years. And now I help other people get access to capital.
That's wonderful, Ariel. So I did, when I joined the banks, I joined to understand how is it that everybody around me, immigrants, Spanish speaking, women, a lot of people in the retail space, getting declined. So they had to either resort to higher interest loans with even a lot of folks with high credit scores. But I learned that it's a combination of the C's, right? So these famous 5 C's that the banks are looking at: character, credit, collateral, cash.
Well, don't tell them. Yeah, we're gonna get there eventually. Don't tell them. We don't want to let them know. We want to
You're right. You're right, because not understanding how everything plays together is what was getting people jammed up in the process.
Yeah, 100%. And you actually touched on a big problem that entrepreneurs have, especially people in the Spanish community. Actually, not even the Spanish community, just in the entrepreneur community when they don't know better, right? Mm-hmm. And the problem is that instead of going to the banks, because they're scared of people like you and me that were in the suits, right? The suits. They go to the streets and they get very high interest debt.
Yep.
From charts, basically it's charts.
Yep.
I know people that are paying 120% per year. Oof. And you probably know cases that are very similar. And these people actually qualify for money if they go to the bank, but all they need is to have the knowledge.
Yep.
So again, now that we're on knowledge, okay, so I kind of want to go over all the different things that entrepreneurs need to know so they can know like what to look for when they go to a bank. Let's start with startups. What are some options available for brand new entrepreneurs to get access to capital when they're in the first 2 years of business?
Ariel, that's a very good point. Actually, a lot of folks are already in business and they don't even know it.
Yes. What do you mean?
Absolutely. So I know a lot of consultants who get paid under their Schedule C, and that's already commercial revenue, and that may qualify you for hundreds of thousands of dollars as commercial lines of credit, term loans for your business.
That's a great point. I remember during the PPP and the EIDL era, right? The pandemic money. A lot of people were qualified for the PPP money. They just didn't know.
That's
because
right.
They were entrepreneurs. They were driving for Uber, DoorDash. They don't know they're already business owners.
That's right.
Right? It's just like you don't need to have an actual physical building, even though you should.
That's right.
But if you are getting paid from a non-W2 source of income, you're an entrepreneur.
That's right.
So it's good that you bring that up.
So actually, the 1099 category, that's an entrepreneur, a solopreneur as we call it. And that is already commercial, and that already qualifies for commercial loans.
So what about those people that just got started with Uber, that person that just bought the grocery store, that just opened the LLC 3 months ago. Like, what do you recommend for them to get access to capital so they can start or scale their business?
Yeah, so let's start with the cheaper money. So grants, right? CDFIs are very important when it comes to grants. There's a lot of information, resources available to people that come from the CDFI space. Also, if you already have some kind of collateral, you can actually borrow against the collateral to start a business. And there are also a lot of business credit cards out there that may allow you access to cash advances at 0% interest for 18 months in some cases.
That's a great point. So I do want to talk about some of those options. Probably like dig a little bit deeper, starting with the CDFI. So for those of you that don't know, CDFIs are community development financial institutions. And these are institutions that actually get money from the banks. They get money from the government. They get money from private investors to provide funds to underrepresented communities, right? To immigrants, women in business, people that live or serve people in low-income communities, all based on the census. So this was crazy. A lot of people don't know this because I used to work for one, and I got to mention the name. That's a whole nother story. But you can have, in some cases, not the best credit score, and you can actually get approved for the capital that you need as long as you have the ability to repay back the loan and you can explain what happened with your credit. So it's kind of like a second chance that you could get. Now, I'm not saying like you have a terrible credit score, go look for CDFIs, but if you're somebody that maybe had like a medical bill that you couldn't control and you're already like 12 months later and you had good character, we're going to talk about character later, and then you went ahead and took care of that issue, then you might be surprised. The CDFIs, they have a credit box that's way more lenient than your traditional banks. So, what's your experience working with CDFIs and providing loans to people with them?
So, Ariel, something interesting about CDFIs, and I want to talk a little bit about CRA. So there's a compliance requirement that banks have, and when they don't meet those requirements, they actually reach out and work in partnership with the CDFIs to help them reach those compliance measures.
What is CRA? Because remember,
CRA is Community Reinvestment Act. It's a law from 1977 that requires banks to make loans in certain communities that historically they didn't. And so to make up for that, there's a requirement that those loans be made in those communities. And, you may be entitled to access to capital, loans that are, flexible because of CRA, and you may not even know about it. Let us know if you're one of those people who want to know more about CRA. We'll be glad to talk to you about it.
So basically what you're saying is that by law, the government is making this nonprofit institution, sometimes for profit, provide access to capital to underrepresented communities.
That's exactly right. So CRA, that law, also comes with penalties for banks. And when they don't make those loans, there are fines, there are punishments. And so as a result of those audits that the banks don't meet the requirements, they are required to invest in those communities that they were supposed to in the first place, make those loans. And so when you apply for a loan, you are denied that loan, you may be entitled to, you may be a victim of a discrimination. There are many reasons why banks don't make loans. And one of them being is that if your loan is considered to be too small, it may not be worth it to them to invest the time and energy into getting you approved.
Paying people like us, we used to get paid hundreds of thousands of dollars.
That's right.
So I'd love to say that your biggest expense is what you don't know. Because if I had known when I went to apply with my father what CDFIs were, maybe we would have gotten the capital that we needed to buy the building.
That's exactly right.
At a more affordable interest rate than what you get today. Yep. And also, he would have been able to maybe buy a second or third grocery store. That's and right. Maybe things would have been a little bit different today. He's doing okay today, but maybe it could have changed the game for him.
That's right.
So I would say that.
You still done pretty well for yourself anyway.
Yeah, well, could be doing better. So CDFIs, grants. What other options for entrepreneurs, for startups you think are available?
Yeah, so, knowledge is the key. You can always partner with someone, always have an equity, partnership. Equity partnerships are very good. They may not require cash from the investors, from the people involved in the business all the time. Knowledge is power, right? So if you have an expertise, a specialty in an area, that is sometimes more valuable than cash, actually. So you may be able to partner with someone who may have the collateral to get a loan, and then your contribution may be the subject matter expertise that you may have. That's for startups. When it comes to businesses that already have 1 year and sometimes even less, Ariel, I got someone a loan with a profit and loss statement.
Wow.
So there are CDFIs who only require a profit and loss statement. That's it. That's the financial documentation that they require. Some of them are national, and some of them may lend you up to 80% loan to value on the real estate that you have.
That's really key to know, right? Because it all comes down to having the right knowledge. But that actually reminds me, right? When I used to work for them, the CDFIs are willing to work with you even you don't have all the necessary paperwork, because when you're an entrepreneur, all you care about is making money at the beginning, right? And you're really good at what you're doing. Right? You have a bakery, you're really good at making cakes and the whole nine.
Right.
So you tend to forget the paperwork. So it's key. Like the biggest thing, if you're an entrepreneur, your books should be in order, right? Like pay an accountant, pay a professional, because if you have your books in order, now you are able to unlock access to capital that you didn't even know you had available, right? So like just like Jimmy said, like you might not have done your tax return for some reason, but your P&L is up to date, or maybe your balance sheet, now you can get access to the capital that you need, right? So can you tell me maybe like 1 to 3 different CDFIs that you recommend that are national so people can work with?
Yeah, so, with the fintech being a popular, space right now, Fundex is one of that I've heard about, and also during the PPP era, a lot of new fintech type CDFIs emerged. And it's always good to work with the national ones. But I also recommend that you work with an advisor, with a local CDFI, because even though the CDFIs are there to help you along the way, there's still paperwork, there's still requirements. The debt service coverage must be established. You have to demonstrate capacity to repay, and we do that at our offices. So call us, book a call. Let us know where you are in your business. If you're a startup, if you're already in business, or you're ready to grow, I have an expert to assign to anyone in any one of those stages.
Awesome, that's great. So, all right, so you brought a very important point. Now I want to talk about another way that entrepreneurs can get access to the capital they're entitled to when they're a startup, right? And a startup is honestly a business owner that's been in business for less than 5 years. So, and actually, this is probably my biggest secret as somebody that helps people get access to capital, and that is backyard banking. So you probably drive by every single day a whole bunch of different banks in your community that you don't even go into, right? Because if I ask you how many banks do you know, you're probably gonna name 10. Chase, Wells Fargo, TD Bank, because they spend so much money on marketing that they want to, that's basically how they get their clients. Just by their name being able to be recognized. But then all these local banks, they are in dire need to provide access to capital because they need to make money. They need your deposits. They need your relationship. They need your business. Big banks, they don't need your business, right? Because they have the institutional clients like Apple, and that's where they make their money. So the smaller banks are looking for people just like you, and because of that, they have access to their credit box is way bigger, right? They're able to fit more people in there as long as you're able to do one thing. And that is building a relationship. Building a relationship with the banks is the most important thing you can do. And how do you build a relationship with a bank? It's as simple as going into a bank. Hey, can I talk to whoever is in charge of business banking? That might be a branch manager. That might be a business banker in the branch, or it might be a special person, relationship manager, like what we used to do. That we're not in the branch. You have to call and make an appointment. So the next thing I want you to do is find a local bank if you're looking for funding. Build a relationship, find out whoever the business banker is for the area, open a business bank account, deposit at least $500 if you have it, or at least $100. Talk to that person, let them know exactly what you want to do with your business, the capital that you need, and find out what programs they have available to help you, because sometimes these banks have programs that they don't even put on their website, and then that banker is going to let you know, hey, we have this special program.
I have a secret for your audience.
Oh, go ahead.
I have a secret for your audience. So I get calls because you and I are in the business of relationship management, as I call it, with the banks and with our clients. And I speak bank. You and I speak bank, and our clients don't speak bank. So I get calls from bankers all the time. Jimmy, we didn't comply last quarter. We need to comply this quarter. We have a special program right now. We reduced his credit score to 620. But you're never going to see that in a banner. You're not going to see an ad about that, because that's not something the bank is even proud of. But we get those calls on the down low. If you want to know more, click on the link.
Exactly. Click on the link, and then just like you're building a relationship with the bank, you also need to build a relationship with people like us, people that are specialized in doing what they really know. And I'm not talking about a random person that you saw online, because if somehow you see one of our ads, now you start getting more ads and the whole night, because you're actively looking for business funding. Mm-hmm. But a lot of those people, they have not worked in the industry, right? Like they're working for somebody that they just thought that helping people get access to capital was a good idea, and they don't really know how things internally work.
That's right.
So work with somebody that has worked in the industry, that actually has the knowledge, that was successful in what they were doing, so then you can also be successful in getting access to the capital that you need.
That's right.
So now going back to backyard banking, right? And after you build that relationship with that banker, then you'll be surprised how, like, for example, how about a whole bunch of clients? I had a client that was able to get $350,000 worth of business lines of credit, right? But not at one place, at multiple small banks. And he was able to do this just by following the strategy that I just told you. And it could be as simple as that, as long as you understand what it is that you need to do and you know exactly how to deal with the banks to build a relationship.
That's right.
So that's something that I highly recommend for you to do. Don't rely on the big banks. Find the smaller banks. That's where you're going to find the gold. You're going to find programs like, I'll give you one bank. Valley Bank will give you a business line of credit up to $100,000 with a brand new business. Let me repeat that. Valley Bank will give you a business line of credit with a brand new business as long as you have at a minimum a 660 credit score. All you have to do is open a bank account with them, deposit $250, and you are in a state that they're located. And even if you're not, I'm going to give you a little secret later, so make sure you watch this until the end. You set that up, and then you apply for the business line of credit. They're going to match whatever you have on your personal credit report. You have a small credit card for $20,000, $30,000. They might match one by one or maybe a little bit more. The line of credit, they will give you a $30,000 line of credit. That's unheard of. You cannot go to Wells Fargo to do that.
That's right.
You cannot go to TD Bank, PNC, all those places. Because they want you to be in business for a minimum 1 year. Or have a strong relationship with them. So imagine you just opened your LLC yesterday, and they're going to heavily rely on your personal credit report to give you that. Right. And it's not even a 700, like a 660. Actually, I think sometimes they could go to 640.
Right.
But again, that you're gonna find those type of deals through backyard banking. So that's one of my biggest secrets.
Yeah, and Ariel, one of the things that people don't want to do is waste their time. You know, going from bank to bank, getting denied is not. Nobody wants to go through that. So I just closed a $1 million deal. It took 5 weeks. There was real estate involved, and the owner, my client himself, said, "I don't know what you did, but I tried myself." And I got a $50,000 offer. Same profile, right? Minor tweaks here and there. Everything was already there. I just packaged it nicely. I spoke bank for this client, and he got approved for way more than he expected.
Exactly. Once you speak bank, you can get more bank results. Like, for example, just like Jimmy said, I had a client. He went and applied at a local bank. He got the client. This customer was making around $4 million a year.
Wow.
And then you would think that any bank will be willing to give him access to the capital he needed. He had a good credit score. Mm-hmm. Yet he got the client, and he was able to find a small line of credit for like $60,000. Wow. He cannot do that. Like, that doesn't really do anything to him for somebody that's making around $300,000 plus a month, right? And he needed access to capital a little bit quicker than usual, and he was very frustrated. He found me online. I went and spoke bank to my bankers, and I did my thing. I packaged the deal with the right profile, so the bank actually understood the need that they had, because the client didn't know how to communicate the need that they had.
Correct.
So by being able to do that, I was able to get him approved for $400,000 and some change.
Wow.
I could have gotten him more, but he needed the money in the next 2 weeks.
Correct.
And I'm not talking about a 40% interest rate MCA loan, cash advance loan. I'm talking about like prime. Right, prime is the Federal Reserve rate. Like, I think it was like 6% at the time, 7%. It was like 6% plus 2, so 8% on a line of credit.
Which is great.
That capital actually helped him grow his business. Now almost double his revenue in the next 1 to 2 years. He told me.
Yep.
Because he was able to hire the employees that he needed and upfront that payroll that payroll expense that he had. So again, you need to work with a professional.
Absolutely. Ariel, another thing I've been successful at is. As you know, we work clients together, is these unsecured business lines of credit. And these are for businesses who can be as young as 1 year old. And unsecured means that it won't show up on your credit report. It's free. It's open-ended. What I mean by that is not restricted. So you can buy merchandise with it. You can operate your business with it. You can invest in sales and marketing, operations. You can grow. You can even buy real estate with this line of credit, and it doesn't show up in your credit report. And it's an amazing, product because once you pay it down, you can use it again and again and again and again, and I love it.
Now, 100%. And actually, what Jimmy's saying, like also to say like in different terms, if you have a 700 plus credit score and you have an LLC that has been open for at least a year, you're sitting on a business banking gold mine. What do I mean by this? You will be able to go to multiple banks and get access to an unsecured line of credit, in some cases up to $250,000, right? And a line of credit is basically a bag of cash that the bank is holding for you. You come in, you take cash out from the bag, and then the bank is waiting for you to put that money back. Once you put it back, the full amount of money is available to you again. You don't have to keep reapplying every year. And what's beautiful about those products, up to $250K unsecured, is that you're not gonna have to show any documentation. Have you ever applied at a bank and then you were approved, but the bank is asking for 30 different pieces of documentation, right? The reason why is because your deal was not packaged properly. You didn't know how to communicate to the bank your actual business need in a way that they understood, right? Once you understand how to speak bank. And because of that, they're asking for so much paperwork because they might have seen a red flag. You don't know how to communicate your actual business need. So a no-DAC unsecured line of credit can close very quickly. And also, it can remove a whole bunch of headaches that you might have that will get you frustrated from a banker asking you for a whole bunch of different documentation that honestly you don't really need to show to them. That's right. Right? Up to 250K. After 250K, yes, you're going to need to show some stuff. But again, you have a 700 plus credit score and your LLC has been open for at least a year and your business is cash flow, meaning that your business is making money, you're sitting on a funding gold mine. So I highly encourage you to click the link that you're going to see somewhere in this video so you can book a call with our team so that way we can help you get access to the capital that you need. But this video is not about that. This video is not about giving you the knowledge, but also giving you the resources that you need. Like that's what we're telling you, book a call.
Right. And also, Ariel, every case is unique, right? So every person has a unique set of C's. So some folks may have better credit, but the collateral may not be there. The cash may not be there.
But let's tell them what the 5 C's of credit are.
Yes, of course. Very important. So, the 1C, collateral. Mm-hmm. All right, so if there's collateral, you can always pledge it. But if there is no collateral, unsecured is always the way to go. Then there's credit. What does that look like? Is your credit score high? Is it low? But why is it low? If it's low because of delinquencies, that's one thing. But if it's low because you have a short credit history, that's not as bad. But if you don't explain that in the profile, then it may be perceived as low credit because of other reasons that are negative. The other one is character. All right, so character has to do with your behavior around credit. So, hey, for example, Maria, I see that there was a late payment back in July. Oh, I just neglected to pay it. That speaks to your character around debt. But if you had a personal situation, if you had to travel, if you had something unexpected, maybe medical, maybe unfortunately, you were the victim of something, there's a way of explaining that takes away the negativity around the late payment. And then there's always the cash.
I want to talk more about character because character is really important. Mm-hmm. I mean, with character, it's probably one of the most important C's out of the 5 C's of credit. And the reason being because your business is as good as the person backing up the business.
Right.
So that's why banks are going to ask you to put a personal guarantee. And honestly, if you cannot put a personal guarantee behind your business, then you shouldn't be in business. Right. Because that means that you don't believe in your business. Like I'm willing to go through bankruptcy. Like a lot of the most successful entrepreneurs know, like they're willing to risk it all to become an entrepreneur. So character is super important. The banks know this. Yeah. So the best way you're going to be able to represent the character that you have and that your business is going to have is like, how have you treated debt at the personal level?
Oh, right.
So that's why the banks are going to analyze your credit report first. Because, for example, look, you might apply it to your whole lifetime, maybe 20, max 30, 40 different, 50 different credit applications throughout your life if you're a responsible person. Banks go through millions and millions of applications every day. They have so much data into what businesses are going to work, what businesses are not going to work, what trends and behavior your credit score is going to represent. So they even have a way to say, like, this business might go bankrupt just based on the way that the business owner is managing his personal debt. So because of that, like knowing that you're not gonna beat the bank, the best thing you could do is make sure that you have the right character. And having the right character, besides having a good credit score, could be something as simple as, okay, you had a debt that was behind, but what do you do to take care of that? How long ago was it? Banks are willing to give you a chance, but you also have to be able to work on your personal character. So character is one of the most important C's. So which other C's do we have?
So the other C is capital, collateral, character, cash, and then cash flow. So, if your business is grossing millions of dollars a year, but you don't show the cash flow to sustain the debt that you seek, you're going to get denied. And that debt service coverage, bank speak, as we know, is 1.25 for the most part.
And then to put it on regular person terms, right, on customer speak, right?
That's right.
Your cash flow, that's basically your ability to repay. So that answers the biggest question that I used to get when I was a banker. How much money am I qualified, am I approved to get? And my answer to the customer will always be, how much can you afford to pay back with your business not going to shit, basically, without your business being able to pay their bills? Like, how much debt can your business handle with the monthly cash or the monthly amount of money that your business is bringing in? And then how much money is left over after you pay all your expenses? Like, how much cushion do you have, right? And the more cushion that you have, the more you're going to be able to afford. So banks have their own way of calculating that through what Jimmy just said, like the global debt service coverage ratio. But we're not going to bore you with bank speak. What you need to know is, like, if you have enough money to cover that debt, you can find an online calculator online. How much is this loan going to cost me with a 5-year term? Or talk to your consultant if you're working with one, or at least your business banker, and ask them, like, how much money can I afford? And they're going to ask you, well, like, how much money are you actually making right now? Is your P&L up to date? Is your balance sheet up to date? All that stuff. So, okay, so those are the 5 C's of credit. And we gave you some tips that you can go and take and apply so you can get the funding that you're entitled to. And once again, we're going to be working. We have space to work maybe with like around 8 to 10 different people this month, right? Because you actually, when you work with me and Jimmy, you work almost one-on-one, right? When I say almost one-on-one, because you might either get me or him. So we're looking to 8 to 10 different entrepreneurs that we want to help them get access to capital, the capital that you're entitled to. So if that's you and your business is already cash flowing, you have at least 1 year in business, right? Just click the link somewhere that you're going to see in this video, book a call with our team, or it might be us or somebody from our team, and then let's have a conversation to see if we can help you get access to capital that you need. And if not, and if it's not your time, you're just doing research online, then leave us your questions in the comments. So that way, we're going to make sure we're going to answer every single question, whatever question you have in regards to getting access to capital. So that's all for today. I'm glad that you made it all the way to the end. And then, do you have anything to tell them?
No, just that, anywhere from $250,000 to $1 million in lines of credit is available. And all you have to do is fill out the paperwork correctly, say the right things, and show your business in the best way. And we are here to do that.
So you want the cash, we have the banks. Talk to you soon.